Hi there, welcome to Kneppy Invest and welcome to January 14, 2025. The market has been closed for over 2 hours. Yep, just over 2 hours. So yes, I am recording this video a little bit later than I usually do because sometimes stuff happens, life happens, and that stuff happening in life gets in the way of me recording a video. That's exactly what's happened today. So hopefully you have not been waiting at your computer, your laptop, your phone, your iPad, waiting for this video to drop because you've probably been waiting for a few hours. And just a bit of a forewarning, Fridays, January 17's, ASX Daily Rundown video will be released really late because I'll be busy that whole day. That whole day from about 6 a.m. to maybe 7:30, 8 p.m. I'll be busy all day. And that video, I still want to record it, and that video will be probably released fairly late on a Friday evening. So do not wait for that video to be released, unless it's like 8 or 9 p.m. Anyway, on to the market today. Now, before we actually have a look at the market today, what's the agenda? So we're going to do usual things, go through the market today. I do want to be a little bit quicker than usual because I am recording this a little bit late. I have not recorded the ASX stock of the day yet, but it is going to be Telix Pharmaceuticals for obvious reasons. I have come up with the top 5 stocks, but I think I might do what I did yesterday and just go through about 11 or 12 candidates for the top 5 stocks. So I might do that, and that way I can just go through these companies, these 11 or 12 companies, fairly quickly. I have 4 companies charts I want to look at, and then maybe I'll touch upon 1 or 2 of your comments because I am getting a lot of comments. In fact, I'm not only getting a lot of comments, I am deleting a lot of comments. Not your comments, but these are spam comments that as soon as they're put onto one of my comment sections, they get like 90 likes and about 50 replies. They're Bitcoin and stuff like that, or recommending everyone watch a video of some person. So I think I deleted 3 or 4 of those just before I started recording. Anyway, so let's get to or have a look at the ASX today. A pretty good day. A nice little rebound after what happened yesterday. So maybe what happened yesterday was just a one-day panic session. That can happen on occasion. Everything is in the green, and I'm really happy to see tech up 0.41% because NASDAQ was down 0.3%. However, in saying that, NASDAQ actually did rally during the day. It opened lower. I think it was down 1.3% on open. In fact, before I went to bed, I had a look at the futures, and it looked like it was going to open fairly down for the day, and that's exactly what happened on open. And then it rallied through the day. So that's actually really encouraging, and that's why we are up today because of that rally. Not only that, Dow Jones was up 0.86%. Now, on the chart here, I do have Rocky Mountain Chocolate Factory, a fairly small company on the NASDAQ. It has a market cap of $20 million, fairly low revenue. And the reason I was looking at this chart is because Rocky Mountain Chocolate, hello, and Factory, hello. And I'm going to this area in September, October of this year. And the reason I was looking at this chart is because they're releasing their earnings tonight. Yes, they're releasing their earnings tonight. Not many companies releasing earnings, but we're starting to see this ramp up. And tomorrow we're going to see the banks release, not tomorrow our time, but tomorrow NASDAQ and New York Stock Exchange time. JP Morgan, Wells Fargo, BlackRock, Citigroup, Charles Schwab, also Rio Tinto, Kinder Morgan, Bank of New York. And typically when the banks release their results, that sort of signifies the start of their reporting season on earnings. So over the next 2 weeks, 2 and a bit weeks, we're going to see most of the big companies in America, not Nvidia, will release their quarterly results. And I do like this time of year because of that, and also because we're in a quarterly reporting season in Australia. It happens at the same time every 3 months, and we're going to start to see a lot of Appendix 4Cs and Appendix 5Bs being released over the next 2 weeks. We saw one released yesterday and one released today. Both companies are not the sort of companies I would invest in, even trade in. I will touch upon that company that did release their Appendix 4C today because they were operating cash flow positive, just like yesterday's company, which was the Love Group. Not the Love Boat, the Love Group. Anyway, a little bit of a tangent there. I wasn't actually going to talk about that, and I wanted this video to be a little bit quicker. So let's get into the ASX today. And a pretty good day. Don't really have to look at what happened today. So really, I wouldn't say going sideways, but nothing wrong with what happened today. There was a bit of a dip around about midday lunch, and then there was a bit of a rally from that dip. So yeah, so it was up. I have a feeling it was up a fair bit, yeah, just after open, and then was only up about 0.2%. I saw that. I had a quick look at my phone. I went, oh, why is it only up 0.2% or something? And we did see it rally in the last 2 or 3 hours of trading. Now, onto the best and worst performing sectors and indices, materials. Another good day for mining companies, including gold. I think maybe oil. Yeah, energy up 1.17. Real estate a good day. Telecommunications and staples. And IT is actually down. IT down 0.49%, which sort of does make sense. Which is interesting because up here we have all tech up, but the IT sector is down, which sort of does make sense because NASDAQ was down 0.3%, and discretionary flat, and financials flat. ASX 20 only up 0.31%. I'm wondering if the banks struggled today. So that's why the ASX 20 is not up as much as some of the other indices, including ASX 200, 300, 150. So let's have a look at the ASX 20 just to see if the banks, in fact, we didn't have to do that because just below the ASX 20, we have the ASX 200 banks, which is down. So I would say that some of the major banks are down today. And let's confirm that. I would say probably 14 companies up, 6 down, 11 up, 9 down. And those companies that did struggle today, including WiseTech, CBA down a fair bit. I wonder if the bubble's bursting. Wesfarmers, Westpac, Macquarie Group, CSL, and NABs. So some of the biggest companies are down. In fact, if you look at the biggest companies on the ASX, here we go. Yeah, actually, of the 8 biggest companies on the ASX, 6 of them are down. BHP had a good day, but yeah, 6 down. So if you're heavily invested in the top 10 companies, you probably had a bad day, relatively speaking. Anyway, and the best performing company was Fortescue, and then QBE Insurance, BHP Rio Tinto. So obviously, I know had a pretty good day. And there's Woodside Energy. It looks like maybe Woodside Energy is possibly starting to show signs of breaking out. I'm just going to confirm that. I had a look at this chart yesterday, and I was thinking, oh, this is starting to show signs, interesting signs. Now, the reason I said that is because even though the moving average is still going down, the share price of Woodside just went above the previous high. So possible higher high. Well, not possible. We will see a higher high. I'd like to see a little bit of a pullback, and then we can get a higher low as well. So possible first signs of a shift in trend for Woodside Energy. Okay, so let's move on to the top gainers of today. I will go through this fairly quickly, maybe. Okay, Wellard. Yeah, we can talk about Wellard. That is in my list. Yep, it is in my list. And it makes sense. It's up 105% on pretty good turnover. They sold a boat. So this is the one thing I know about Wellard. I'm pretty sure they still do it. I could be wrong. That they transport cattle overseas to Asia. I could be wrong about that, but I've never really researched this company. So obviously they own boats because they have sold one of their boats. And they got a fair bit of money from it, $50 million US. Sale of Ocean Drover. Now, to be fair, I did not open up this announcement. I just assumed this was a boat. I could be wrong. Maybe it's a drover, whatever that is. I wonder if a drover. I thought a drover was some sort of vehicle, like a 4-wheel vehicle. Well, yes, that. But I wonder if there's another word for drover. No, maybe that's it. Okay, so I'm assuming it's a boat. Yeah, let's have a look. Yeah, vessel. They're calling it vessel here. Anyway, so the most important thing here is this is $81.2 million in cash, right? This company had a market cap that was fairly low, about 38 million. I'm not sure how much debt they would have had. They probably had a little bit of debt because it wouldn't have made sense that this company had a market cap of 38 million. They sold this boat for like $81 million. That would be absurd that they would have more cash than the market cap. Market cap has rallied. Well, of course it's rallied, but it's up to about $78 million, which is the cash received. So I don't really follow this company all too closely. They also mention here, upon transaction completion and before any return of capital shareholders, the sale of the boat will result in 81.2 million of increase in cash. So it's interesting that they just mentioned return of capital. And when companies get into a lot of cash like Wellard, a lot of times they will return that capital to shareholders. I hate that. Really hate that. I just don't want return of capital. It's not free money. You have to be in Wellard before this announcement to get that money. To get any benefits of the sale of this boat, if that makes sense, because it's not free money. Because say they return that capital to shareholders, the share price of Wellard will drop significantly because it's not free money again. Dividends are not free money. If you get like a 5-cent dividend, the share price of the company will drop 5 cents. It's not free. There is a cost to dividends. Anyway, so that's the reason why Wellard is up 105.48%. It would not have been in my top 5 stocks of the day just because it's Wellard. I don't have much of an opinion of this company. I remember looking at this company many years ago, and the share price had just dropped significantly. Yeah, there it is. I remember, yes, 2016. Share price just plummeted, and it's struggling to get back up to those levels. So $1.40 back when it listed. Now it's 15 cents. Anyway, so that's Wellard. Let's move on to the next company. Other than Wellard, we have Tasfoods. Now, this is a company that did release an Appendix 4C, operating cash flow positive, turnover $17, up 21.43%. I suppose it's worth a look. Tasfoods, Appendix 4C, the second one to be released so far this quarter. And some interesting commentary. I did go through the commentary. They were operating cash flow positive. So $11.7 million in receipts. Now, mind you, that receipt level has been dropping the last few years, and it's now back to something like 2016 or 17 levels. In fact, I can confirm that right now. I do have the spreadsheet opened up, and I should have it here. Yep, 11.7 million. It was as high as 20.2 million in the June quarter of 2023. And if you go all the way back, last time it was this low was all the way back to 2019. So receipts have been dropping, which is not a good look. But the company is operating cash flow positive. Not by a lot, 134,000, but they're not free cash flow positive because capital expenditure, property, plant, and equipment, 172,000. So they're actually free cash flow negative by $28,000. Now, this is not the sort of company I do like. And I've come to the realization that this is a tough business. Anytime you're dealing with food creation, it's a tough business. They're talking about Tasmanian poultry market is showing early signs of stabilization. They also talked and complained about the flood of mainland chickens into Tasmania. See if I can find that here somewhere. See if I can find that, because there's a fair bit of commentary here. I bet I won't be able to find it. I should have actually marked it where it was. Yeah, here it is. In quarter 4, 2024, total revenue for poultry declined by 7.7% compared to the previous corresponding period, driven by an oversupply of mainland poultry into both local Tasmanian and mainland markets. This had the effect of increasing competition and lowering clearing wholesale price points. So I'm being a little bit unfair on the company for saying they were complaining about that, but that's sort of the vibe I got, and that vibe looks like it's wrong. At the time, I was getting that vibe. Anyway, so let's have a look at a chart for Tasfoods. Is there any reason to be excited about this company? And once you have a look at the chart, you go, no. No, in fact, if you have a look at this chart, this is a data chart going all the way back to 2016. Downtrend. In fact, back in 2016, share price was like 30 cents. Now it's 1.7. This has been, just like Wellard, a capital destroyer. If you've had your money, your capital in this company, it has destroyed it. So this is another reason why technical analysis can help you. So one of the reasons I like technical analysis is because if I actually had 2 rules in regards to my investing, it would be to grow my capital and to protect my capital. And one of the best things about technical analysis, it really protects your capital. You can also grow your capital. So this, if you had invested your money in Tasfoods back in 2016, your capital has been destroyed. So another reason why technical analysis can be a good thing. Okay, so I really spent a little bit too much time on these 2 companies, but Well, Wellard had a good day. Tasfoods up 21% on $17 of trading. Company called Adisyn. This is one of the charts I wanted to show you. So let's have a look at the chart for Adisyn. Why not? This one looks really good. This is a really good looking chart. Beautiful uptrend. Share price had pulled back the last, say, 5 or 6 trading days, and then a really big increase in share price today on pretty good volume. So a really good looking chart. I don't know anything about this company. The one thing I do know is the chart looks spectacular right now. So Adisyn, ticker code AI1, one of the best performing companies today. Okay turnover as well. Anything else here in the top gainers by percentage change? We have Singular Health up 16.3%. I suppose I could have a look at this one as well, this chart. So there was a mention in the comment section about this company, and because the share price was dipping and the share price has taken off again. So a nice rebound off the 25-day moving average. I thought maybe it could fall a little bit more, but it has rebounded off that particular moving average. Okay. And then at the bottom, we have Ingenia Communities. They did release a really positive announcement. That's why the share price is up 15%. But I'll talk about that company now. Yeah, because I actually am not doing the top 5 stocks. Okay, so Ingenia Communities, they deal with real estate. They have holiday real estate, rentals, retirement places as well. So real estate. Anyway, so I had a quick look at this company's announcement today. Financial year 25 guidance increase. They tell us straight away that this is a positive announcement in the title of the announcement. Guidance increase. Straight away, you know this is a really good positive announcement. I wish more companies would do that. Some companies will just put a guidance. They put just financial year 25 guidance, but is it positive? Is it negative? Don't know until you open it up. I had a quick look at this company's sort of their announcements the last year or so. And this company is moving in the right direction. They had upgraded guidance or better than expected results in August. They have a 5-year plan or something like that. And things are moving in the right direction for Ingenia. So let's have a look at this financial year 25 guidance increase, because this is the sort of announcement I'm looking for. And then after I look at this particular announcement, have a look at the vibe, the commentary, then I have a look at the chart. Is it a breakout? Anyway, so the group is now targeting EBIT to be between 162 and 165 million, 20 to 23% growth on financial year 24. The previous target was 148 to 155 million. So this is a pretty good increase in group EBIT. Earnings per share increasing to 29 to 30 cents. Share price of the company, what was it? It was $5.20. So we are talking about, does look like it's not that expensive with that sort of growth. The question is, can they maintain that growth moving forward? Now, that was a significant increase in the previous target, which was earnings per share of 24 or between 24.4 and 25.6. They talk about why, and it's all around the successful implementation of their strategies. So it's not talking about the macroeconomic environment or anything like that. So they're just talking about the implementation of their strategies. So a really interesting announcement from Ingenia. And because I was actually interested in this, I actually went back to, their half-year results or the 4-year results, their AGM, and there were some things to like with this company. And then I look at the chart and I thought maybe this could be a breakout situation. And then, no, not quite there yet. In fact, the share price was under a little bit of pressure before this particular day. And funny enough, if you actually put a line right there where the share price is yesterday, it was sort of at the bottom of a range. And hopefully it's pretty obvious that about $5.25, sort of in this zone here, we'll say between 520 and 530, maybe even 540, 545, that's a resistance zone. And hopefully it's obvious why it's a resistance zone, because between February of last year and all the way through to now, the share price is having trouble getting above that zone. So even though I did get some really bullish vibes about the commentary, their results, financial increase or a guidance increase, things are moving in the right direction, I don't see the same thing in the chart. So the market is a little bit more skeptical than what I am seeing within the commentary of the company and also the financial results. Now, I wouldn't be surprised, and a really good one-day candlestick, by the way. And the reason it looks really good is because they released this announcement at 3:17 p.m., so towards the end of the day. So a lot of this run-up in share price happened in that last hour of trading. And it's going to be really interesting to see because this announcement came in fairly late, which means the majority of, maybe not the majority, but a lot of investors might have missed it. And they might see it tonight, and that's why the share price could break out tomorrow. So definitely want to put on your watch list. I'm putting on my watch list. In fact, I'm doing it right now. Not in my trading view. I'm just writing it down so I can have a look tomorrow morning when the market opens. Anyway, so that's Ingenia, a pretty good update from the company. And let's have a look at the top gainers by market cap. So we have Whitehaven Coal, Ingenia. None of these companies, Clinuvel, Tabcorp, John Ling, released anything today. Very interesting that Tabcorp up 6.25%. I would describe Tabcorp as maybe not a defensive company, but when you don't usually see that sort of increase or even decrease in share price unless they release something interesting or intriguing. I don't think they did it. Opthea, first time they released a presentation today. Opthea. I've never had a look at this company before, but I thought a couple of you picked it for the top stocks of 2025. So I thought I had a look at their corporate presentation today. And now this company is still a story stock, no revenue or anything like that. And it was actually a good read. So I wouldn't say I understand the company perfectly, but I definitely know what they do at least. So something to do with vision anyway. So have a look at Opthea. And by the way, might as well have a look at the chart for this company, Opthea. And the chart has been all over the place. By the way, this company has a market cap of $1 billion, even though it is a story stock. So the market is really positive about the future of this company. So it says here market cap 567 million in trading view. I have a feeling Opthea, $985 million in market index. I do probably trust market index a little bit more than trading view. Clinuvel up 5.9%. Go Clinuvel. I'm going to have a very quick look at this chart because the share price has been a downtrend and it's still in a downtrend. And the more it falls, I think the better value this company is. P ratio probably below 20, 15.99 for a company that's growing quite quickly, quite nicely. If they can continue that growth trajectory, this company is cheap at these levels. And it just shows you how sentiment can push the share price and the valuation of a company down to really interesting levels, to where it looks like it is cheap. So maybe the market sees something that I just can't see, and it's wary. Maybe that is true. This is a one-product company, so maybe I am just not seeing something with Clinuvel. Anyway, what else do we have here? Infomedia, Star Entertainment Group. Okay, so I'm pretty sure the share price has rallied up 12% because Xingchun Wang has bought or he's increased his holdings. This is a guy in Macau. I forget how he got his wealth. A fairly wealthy guy in Macau who's just increased his holdings. I don't think, in fact, if you Google it, so that's what I'm going to do now. If you Google it, you should see, mystery Macau businessman emerges as major star investor, Macau-based investor is second biggest holder. Now, there are some limitations how much he can own. For example, only 10%, if I remember correctly. So increase it from 5.5 to 6.2%. I think it should mention that 10% somewhere in this. The other thing I should also mention is I noticed that Morningstar have mentioned that there is a 50% chance Star would fall into administration by February 28. So 50% chance this company will move into administration. So what is this particular Macau person doing buying some shares? Because I don't think he is looking for a takeover. I'm not sure, but don't know. So anyway, so that's why the share price has rallied, because this particular dude, what's his name again? I can't pronounce it. Xingchun Wang has increased his holding. I'm pretty sure it was 5.5 to 5.6%. We can just have a look at the substantial holding announcement. 5.5 to 6.5. So I was a little bit off. So from 5.5 to 6.5%. Anyway, so that's why Star Entertainment Group has rallied today, and that's why it's on the list of best performing companies. We have Titomic, Peninsula. Did I put Peninsula down? I did. Share price of Peninsula up 8.9%, one of the most disappointing and reigning companies on the ASX. They did release, however, a bit of an update because they've started production. Started production in Wyoming. They also released a presentation, which I did not have a look at. So Lance project update. Will I go close to this project? No, it's in eastern Wyoming, and unless I go to the Black Hills of South Dakota, I won't be close to this particular project. Anyway, so it's near the border of, I'm pretty sure it's near the border of Wyoming and Nebraska. Anyway, they talk about how much cash they have, $45 million US, and how much early stage operations they produced of uranium, 1,100 pounds. There we go. So it seems like the market liked it, unless uranium had a pretty good day. So let's have a look at Peninsula Energy's chart. And this chart's not going to look good. I'm warning you right now, this chart is not looking good. In fact, it looks similar sort of to Clinuvel. And share price is in a downtrend. Is there any reason to be excited about this? My answer to that would be no. By the way, that's a weekly chart. This is a daily chart. My answer to that would be no. It has rebounded nicely off $1. Probably that's the only positive thing you could say. So yeah, it's gone up for 40% since rebounded off $1. Not much volume though when it rebounded, which is interesting. Anyway, so that's Peninsula. Share price up 8.9%, and that might be it. Yes, Paradigm would bounce there. Go Paradigm. Anyway, let's have a look at the top losers today. And by the way, I should actually eliminate all the companies I've talked about here. In fact, I've talked about all except 5. Okay, top losers today. Nothing of note. Nothing of note. Sparc Technologies. I actually did want to mention or look at this chart because this company's share price went on a bit of a ride, upwards ride the other week, and I just noticed it was on the top losers today. So I thought I'd just have a quick look at the chart. They released something, was it last week or the week before? And it went on, yeah, it must have been last week. Share price rose, what was it, 17% on the 7th, and then a further 51% on the 8th. And I was thinking, there's no way I'll get in this. Just share price has run up too hard, too quickly, and I wouldn't be surprised if there's a pullback, and the pullback is or has been quite stark. Maybe not stark, Game of Thrones stark, but it has been quite distinct. Share price has dropped from 31 cent all the way back down to 21 cent. Now, this could be a buy the dip situation. It could be, or the share price could keep on dropping. So I just want to have a quick look at Sparc Technologies chart just because it was featured last week in my videos. And other than that, nothing much to talk about. Fairly low turnover, and most of the companies in this list are fairly small, apart from Brightstar Resources. Market cap 205 million. Know nothing about that company. So let's have a look at top losers by market cap. At the top, we have Mesoblast. Capital raising done at 250. The one thing I do like about this capital, actually, there's a few things I like. No, one thing I like, a few things I don't like. I don't like this as a placement, so normal shareholders like you and me can't participate. Would I have bought some shares, Mesoblast? Maybe, probably not. It's just a what do you call it? A placement. I don't like that. I think when a company does a capital raising, they should allow shareholders like you and me, retail shareholders, to participate in the capital raising. And if not, then the capital raising should be done shouldn't be done at a discount. Maybe not a large discount, but just a very small discount. Anyway, the one thing I do like about this, Mesoblast raises new capital for Rice and Seal commercial launch. I love that last bit. Commercial launch. Commercial launch. So that's why I'm excited about Mesoblast this year, because of that commercial launch. And there are a few other potential significant announcements this company released this year. So Mesoblast down 9% because capital raising. Hyperion. Yes, I did put Hyperion in my chart section. So let's have a look at the chart for Hyperion. And this could be another buy the dip situation. The chart of this one has been looking really good. Hyperion. Pretty sure, actually, I have no idea what this company does. Some sort of tech. I'm pretty sure it's still a storage stock. And share price, you can see this really big rally in the share price in late December. Share price went from $4.40 up to $6, and it's pulled all the way back. So this is an area, and what I'll do is I'll just put a triangle. Actually, where are the triangles? Here we go. Or rectangles, not triangles, rectangles. So right there is a support level. Well, no. Right there is a support level. And the share price has pulled back in a support level. Not only that, I'd probably say, if I had a guess, RSI, the shares are oversold. And today would be, yep, or not quite. They're not quite oversold yet. So possibly more to fall, but if they do fall below this purple box, that would be a negative move. So you might see a little bit of support in this area. The reason I'd say this is a support zone is just look how long the share price stayed in this zone from the 22nd of November up until the 23rd of December. So 1 month it stayed in that zone, just going sideways. So a lot of investors bought in that area. And when the share price took off, there would be a lot of investors on the sideline who said, oh, I've missed my chance. I've missed my chance. The share price has taken off. And now they're thinking, oh, the share price has pulled back into this zone where I could have bought and I missed my opportunity. That is support. That is what you want to see buying into this little pullback. Whether that happens, don't know, but we'll see over the next few days. So I'm interested in this one just because share price has pulled back a fair bit. Other than that, I know nothing about the company, so it's just the chart. Anyway, so it's Hyperion. Up and down a fair bit. If it's down again tomorrow, we'll have a look at the chart for that one. MTM Critical's down. Now, this could be a buy the dip situation. I haven't had a look at this chart for a few days. So let's have a look. Maybe, I'd like to see it to get down to about 22 cents. 22 cents. Maybe if it gets to 22 cents, that would be a nice little buy opportunity. The reason I say that, the moving average is near that 25-day, and there is a bit of support at that level. So I wouldn't be surprised to see the share price keep on going up, maybe reverse from tomorrow. EZZ down a fair bit. If it's down again tomorrow, we'll have a look at that chart. It's looking a little bit more negative now, 2 big down days in a row. And that's about it. Okay, so that's the top losers. So I've already talked about most of the companies I do want to talk about, but there are 4 more. But Telix Pharmaceuticals is a stock of the day. So I'll talk about that company in that particular video. But as a few of you did mention, they did release an update last night, and this was a positive update. Share price up 4%. They released, where is it? So there's like 5 announcements they did release. There it is. Telix exceeds financial year 24 guidance with $142 million fourth quarter revenue. So this is another announcement that is titled absolutely correctly because there's no ambiguity here. Telix exceeds guidance. It's an upgrade. So I'll talk about Telix in that standalone video. They've also released a presentation. In fact, they released 2 presentations. Presentation accompanying their acquisition. So that was yesterday morning. And they also released a presentation, a JP Morgan Healthcare Conference presentation. If you know nothing about this company, have a look at that presentation. It's a pretty good presentation from the company. So look out for that standalone video on Telix. I will release that either tonight, the 14th of January, or on the morning of the 15th of January. Okay, so let's have a look at the last 3 companies I do want to talk about. The first one is, how should we do this? All 3 positive, by the way. First one is City Chic. So this company released a trading update that was titled First Half Trading Update. So a little bit of ambiguity, not ambiguity, but is it positive? Is it negative? We just don't know. You could have written beat expectations or something like that, so we don't panic if we're a shareholder. Anyway, you can see the share price up 14.6%. This was a positive update. Now, we saw Myer Holdings and Premier release negative trading updates. So I saw this and my first thought was it's going to be negative. It's not negative. It's positive. This was a positive update from the company. So revenue was down, if I remember correctly, or maybe in America it was down. It was down, I'm pretty sure. Underlying EBITDA, positive. Strong turnaround from an EBITDA loss in the first half of financial year 24. Continued trading margin improvements in all regions. Inventory of 32 million, net cash of 12 million. I'm talking about strong momentum. Also talking about challenging for USA business. And in this revenue growth by region, pretty nice rebound in Australia and New Zealand. Not so true in Americas. But it looks like the positiveness in Australia and New Zealand has beat that negative experience or performance in Americas. So a nice little rebound in City Chic. Is this a reason to get excited and buy some shares? Is this a breakout? Unfortunately, I think the answer to that is no. And you can just see the chart. It's a no. Now, maybe we're in a consolidation period. Not we. Maybe City Chic share price is in a consolidation period. They have released some positive and negative announcements over the past 6 or 7 months. So it could be just consolidating out. And maybe this is the bottom or near the bottom. And maybe if they continue to release some positive announcements and the financial performance keeps on improving, this could be a good opportunity to buy some shares in City Chic. So keeping a close eye on this one. Maybe this is a turnaround. And don't forget, however, the share price of this company has dropped from $6 or near $6 all the way down to 11 cents. So it doesn't mean the share price will get back up to those levels, but it's a possibility in the next 5 years. Just don't know. Anyway, so that's City Chic. That would have come in at number 2, by the way. No, number 3. I would have put Ingenia at number 2, City Chic at number 3. The next company I'm going to show you is a company I own. And share price only up 2%. The chart is struggling. The share price is struggling. The chart looks weak right now. One of the reasons I'm a shareholder of this company is because they sort of expanded. This is a cooling company, so sort of like historically an automotive cooling company. And they've expanded into aerospace and defense. And this had the potential to be a really good growth area for the company. And the company has shown that over the past few years. I think they went into this area back in 2020. And they released an announcement today that they secured a milestone order in aerospace and defense. And this is sort of backing up my thesis that this company is going to potentially grow significantly in the next 5 to 10 years because of this aerospace and defense. So this was a really good pivot from the company about 3-4 years ago. In fact, I actually do mention it in this announcement. Yeah, 2020. So only not a lot of money. So 8.9 million Australian dollars, but it's with as it's some sort of US government project. So they're developing relationships with the US government. So that could not be a good thing, particularly in the aerospace and defense. If it's defense, any sort of relationship with the defense of the United States can be quite sticky and can be quite good. Anyway, so that's PWR, Advanced Cooling Technology. Unfortunately, the chart looks quite weak. Now, in saying that, got to put the right TIG code in. In saying that, the valuation of this company is looking probably the most attractive it's looked for many years. And the reason behind that, share price has dropped a fair bit. In fact, it's dropped from about $12 to $670.62. Price earnings ratio 30.2. So you might be saying, well, it doesn't seem that cheap. But believe me, it's based off the PE ratio, it's the cheapest this company has been for a while. Now, if we do have a look at the daily chart, probably not a reason to get really excited just yet. The other thing you should mention, when they did have their AGM, you can see the share price dropped a fair bit on that day. And we haven't seen the share price drop any lower. That's a good sign that maybe peak pessimism has been reached for this company. But the one thing I'm going to do is keep a close eye on the chart. And if I see the chart starting to turn up, if I see sentiment starting to shift, I'm going to add to my position in this company. I would prefer, however, for the share price to drop even further so I can get some shares at better prices or better value. So that's PWR Holdings to go to PWH. And finally, Bioxyne. Now, I am trading Bioxyne, bought at 1.2 cents, so I am up 1.2, 2.4, almost up 150%. I wish I put more money into that initial position. Now, they released a really interesting announcement. Addendum to presentation dated 18th of November 2024. I don't understand the word addendum. I thought, okay, they're just, maybe they made a mistake. That's what I thought. And I'm just going to Google addendum. What does that actually mean? An item of additional material added at the end of a book or document. Okay, so that sort of makes sense. my misreading of the word addendum meant I actually didn't look at this announcement for a while. And then I thought I should go back to that addendum just to see what they have written. And I went, oh, wait, this is actually really good. And I'll show you why this is really good. Okay. So they actually mentioned some sort of guidance in their presentation they released on the 18th of November. And they talked about how their objective is to exceed revenue of $20 million and that sort of thing. And they've just written here, the company provides the following in support of this objective. And this is where it gets really interesting. So the company has recorded revenue of approximately $12.5 million for the 6 months to 31st of December. The other two bullet points, they're actually fairly good, but I really want to focus on this first bullet point. Now, this company has, they made an acquisition of Breathe Life Sciences dealing with marijuana. Is that what it's called? Cannabis, whatever it's called. And it seems like this particular business is growing really quickly. Very impressive growth in receipts. So I'm just going to have a look at this. BXN. Just take your time. Spreadsheet. So receipts have grown from below $1 million a month or a year ago to over $5.8 million in the last Appendix 4C. Now, in the last Appendix 4C, so just remember, so revenue, $12.5 million. If we go back to the announcement they released, or the presentation, on the 18th of November, they also mentioned how much revenue they had in the first quarter. And this is where it gets really interesting. So we now know how much revenue the company produced in the second quarter. So I think it was this one. Let's have a look. I've actually got to find, here it is. Yeah, it's right here in the third page. So revenue, strong revenue growth, recording 119% lift to 4.6 million. So 4.6 million in the first quarter. Okay, and also cash flow positive. That's one of the reasons I took a position in this company. There's a second reason I took a position, which I'll touch upon in a second. Yeah, cannabis. Talking about the cannabis market, how big it is. But let's go back to that original statement, the addendum. So 4.6 million in the first quarter, and remember, 12.5 million in the half year, which means in this particular second quarter, they produced about, was it again? For some reason, I'm thinking 11 million. So 4.6, 5.4, 7.9, approximately $8 million of revenue in the second quarter. And I just did a quick calculations and went, that's a pretty big increase in revenue from 4.6 to $8 million. Now, it doesn't mean they're going to be highly cash flow positive. Maybe they've increased their spending because they are maybe searching for even more growth, but that's a pretty big increase in revenue. The other thing I was thinking is they were talking about in this particular announcement that they're, guiding for $20 million of revenue. And I was thinking they're going to be well above $20 million of revenue, and maybe they should upgrade that. Maybe. But I'm a little bit concerned now that if they're not upgrading that amount of revenue and they had a really good quarter, maybe the next few quarters are going to be much lower when it comes to revenue. But they also mentioned here, a new manufacturing facility is on target to be commissioned in January 2025, doubling Breathe Life Sciences' current manufacturing capacity. Anyway, so that's Bioxyne. And the positive vibes I'm seeing in the chart as well. So I think this company is definitely being noticed by someone in the market. This chart is starting to look really good. Now, I bought on the 10th of September. Now, the share price really took off on the 23rd of August, and there was no reason why the share price took off on that day. But I'm just going to point out one announcement. This particular announcement, they released on the 21st of August, which was 2 days before that big run-up in the share price. So they did receive a query from the ASX because of that. Bioxyne manufactures first pharmaceutical cannabis gummies. But not only that, I just like gummies. I'm a big fan of gummies, by the way. Am I a big fan of cannabis? Not really, but it's gummies. But what they actually mentioned here is signed a 2-year manufacturer and supply agreement for the forecast minimum of $28 million of these gummies to one of Australia's largest cannabis companies. I was like, whoa. So this is the first time I have looked at this company for about 8 years. Now, when I first looked at this company many years ago, they were not dealing with cannabis or gummies. They were dealing with probiotics, I think, if I remember correctly. And it doesn't seem like that part of the business has really succeeded. Anyway, so the chart looks really good for Bioxyne. Beautiful uptrend. The one slight negative I do have on the chart is I'd like to see some high volume coming in. That would be a really good sign if we see the high volume. But yeah, definitely things have turned around for this company. Someone did point out that one of the other negative things about this company is the shares on issue. So shares float is about 2 billion. Yeah, 2 billion shares on issue. That is a slight negative for me. Okay, so that's all the companies I want to talk about. There is one chart I want to look at. One more chart. That is Nuix. Nuix. Looks like it's broken down. So yeah, Nuix. I was trading Nuix. I got out because of this big red down day on the 13th of November, down 22.2%. That to me was a sign that the uptrend was coming to an end. Now, the share price really didn't do anything for about 2 months after that, but we have seen the share price pull lower over the last few days and pulled below 550 and also pulled below the lows on the 13th of November. So this chart is starting to look a little bit more negative. So if you are still trading this one or holding, just keep in mind that there is signs that the share price or the trend is starting to turn a little bit more negative for Nuix. Now, I was going to look at some of your comments because that's what I usually do, but this video is going a little bit longer than I expected. So unfortunately, no. Fortunately, not today, which is bad because you're giving me a lot of comments. So one thing I might do is, here we go, Trader Hooper mentioned Telix. So there's a few comments about Telix. Yeah. Anyway, so that's all I'm going to talk about in today's video. I now have to record the stock of the day video on Telix Pharmaceuticals. Okay, so don't forget, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for me. Have a good day. Bye.